Hi there, welcome to GrainTV. It's the Monday, December 29th edition. I'm to my left, Cody Bills. Corn and beans were lower with 4 and 2 cent losses respectively, while wheat bucked a little bit of the trend with a 3 cent advance. Cody, what was the big news out today?
Yeah, I think when you look at the wheat market, I think there wasn't a whole lot of news. I mean, we did get a little bit of talk of Russia having a tariff here of about $40 per metric ton. There's also railway tariffs. So the bottom line here is it's going to be very difficult to move grain out of Russia here. It's getting more expensive to do so. But we already knew that, and that's part of the reason why we sold off for the last week. I think today, we did finish in the positive. We were in the negative for the majority part of the day. But I think what we saw here is really just some support from that 20-day moving average. You can see that it was support earlier on in December. We also have been pausing here for the last 3 days around that level. And but I am concerned here. I am concerned that if we don't start seeing either export sales, pick up in inspections, us winning some sort of tenders here, that these prices will not be justified. A lot of this run-up has been on speculation that these Russian curbs in exports is going to fall onto U.S. books, and that has not really been the case as of yet. We're going to have to see a pickup here if we're going to want to stay at these price levels.
Yeah, exactly. And we did get an Iraq tender today. This morning we did get a little bit of that business, 50,000 metric tons. Versus the overall volume of that deal, which was 200,000 metric tons. But that was on hard red winter wheat. Certainly soft red winter wheat is just not selling. And when we look at export sales this morning that came out because of the delayed holiday, we saw wheat at 328,000 metric tons versus expectations of 250 to 450,000 metric tons. So nothing to write home about there. Again, like you said, we're not seeing the business in the wheat market, which leads you to believe that it's going to be hard to hold these high prices. The good news on the export side was the corn market, where we saw 1.7 million metric tons of new business for old crop delivery. That was well above expectations, putting us ahead for the first time this marketing year of our pace line in green. So you can see that right now we're standing at 26 million metric tons for the entire year to date, versus 25.7, which is what our pace line suggests we need to be at to reach USDA's expectations. So that was good. Unfortunately, the corn market turned lower, probably because we need to see a lot more of this kind of deals going on than just a one-week fluke. So we'll have to see if that continues to be the case.
Yep, that sounds fair enough. Now let's talk a little bit about soybeans, because price action was very interesting today. You'll note we were trading up sharply this morning. We were up about 8 cents, and then we turned around. We actually finished off near the lows. When you look at the chart here, you'll notice that we did move up and to an area that we were unable to surpass here back in the middle part of December. Now, I'm a little bit concerned. You have very positive news coming out of Mato Grosso. Right. You have some early harvested soybeans coming in with very good yield down there, about 52 bushels per acre. That's very positive. When you look at the precipitation in the forecast, next couple weeks, moderate to light rain, no real moisture profile concerns in that area. So I am concerned that when you look to South America, you're not seeing anything bullish here to support prices. When you look at Argentina corn as well, we're only about 5.5% behind last year's pace for planting. Moisture profile, all right. There are some dry areas, but when you look at Argentina as a whole here, next couple weeks, very positive weather here, and not going to offer a whole lot of support here to the market.
Right, and I think farmers in particular need to pay attention now, because we've had a good run-up, over $1 a bushel since the fall, and clearly on these charts, the markets are starting to take heed, and they're starting to pause, and they're starting to look for new direction. And you got to ask yourself, are the fundamentals shaping up for more strength to the upside, or maybe we exhausted and the fundamentals are going to start to rein us into lower prices?
Absolutely. Now, guys, keep in mind that we do have a WASDE report here coming out on the 12th, so make sure that you pay close attention to that. We will have a holiday shortened week Thursday. Markets will be closed. Other than that, guys, thanks a lot for tuning in. We'll see you here tomorrow on Tuesday.